Now heading into the open, our intermediate term bias will be bullish and our short-term bias will be neutral. And anytime our short-term bias is neutral, the real-time intraday bias gets more weight. So that also means that on these types of days, you need to have the ability to read the market in real time and determine the intraday bias and then give more weight to that intraday bias. Early in the session, how the market behaves at the aggressive support and the initial resistance zone is going to help us determine how strong or weak this market is. Holding above the aggressive support would be a sign of continued strength and stability, while a breakdown below it would be an early warning sign for buyers, and it would provide us with the first sign of some intraday weakness, which can then result in a move down into 56.0875 to 16 quarter, with potential to test the initial support, which we're also using as the bull bear zone at 55.88 quarter to 5600 quarter. That marks yesterday's breakout area. So if yesterday's breakout is going to remain intact, then buyers need to hold ES above initial support. And a breakdown below initial support would put yesterday's breakout into question. Now, in order for yesterday's breakout to fail and for the bias to turn bearish, ES will need to take out the initial support and yesterday's low. And then on the upside, we have initial resistance at 56, 36.75 to 45.75, and a break and hold above that area would serve as an intraday bullish indication, and that can then bring the 56.56 to 56.66 into play, and potentially 56.69 quarter to 78.75. Both of those are intraday bias confirming zones, and considering that ES is running on very light volume and we don't have any econ reports on the calendar today, it's quite likely that sellers will step in at 56 to 66 or 69 quarter to 78.75, and it can take some time for the market to process that area. So the expectation is for sellers to be active there on first test, and we will need to see continued broad market strength and sustained upside momentum in order for the market to head higher. So if you're noticing clear signs of weakness in the Russell and the Nasdaq this morning, then that's going to make it very difficult for the S&P to head higher, and we can quite easily get a pullback into 56.0875 to 16 quarter, and even a test of the initial support zone. So again, with our short-term bias being neutral, we need to be more flexible and nimble and pay much closer attention to the real-time intraday situation. So that is the market context and plan heading into the open. Let's see how the real-time situation shapes up and how the market behaves at the initial resistance and the aggressive support zone. That's going to provide us with an early indication as to which side is in control on the day time frame, and we'll take it from there.